How about the S&P's longer-term monthly chart? While the rally here hasn't been quite as steep as the one in the NASDAQ 100, it's still way above the trend. Basically, it's out of bounds. After breaking through the trend line ceiling of resistance a year ago, Gartner notes that the S&P has been trading well above its natural upward slope. However, historically, these types of breakouts almost always see a retest of the previously broken trend line. In other words, she expects the S&P to pull back near the trend line, which again would put it around 4,000. People, that's down almost 14% from here. That's a big hit, 14%. If we get a close below 4,000, she thinks that would pave the way for a much larger correction. While this might sound insanely bearish right now, and to me it really does, Gartner wouldn't be shocked if the S&P tumbles toward the 3,000 level. Even 2,600 could be considered as an outlying price target if things get truly out of hand. Look, I'm just the messenger here. Doesn't help that the relative strength index, RSI, an important momentum indicator, is currently in overbought territory on the monthly chart, although my S&P oscillator says we're at -2, but that's a different animal entirely. When you look at the action over the last 20 years, a reading this high can open the door to some nasty declines. Remember that commitments of traders report, the COT data that I said at the beginning? The bullish side of the trade, well, it's crowded. When the bulls panic, you end up with a stampede that can do a tremendous amount of damage. Put it all together. Gartner's not saying that you're getting a sell signal at this very moment. Right now, the general trend is higher, and she thinks the S&P is likely to rally through the end of the year. She wouldn't be surprised if we see some new highs either. So Santa Claus is indeed coming to town. However, Gartner wants you to understand that the rally from March of 2020 has been extremely unusual. This is not how markets usually behave, and she doesn't believe it can last forever. As we get hit with a series of rate hikes next year, you're going to have to steel yourself for uglier action. That makes sense to me.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.